Cool, I think we should be recording. Just quickly whack these on. But yeah, just a quick video today, guys. I guess the last few days I've been looking at Abercrombie and Fitch, and I just wanted to make a quick video before the earnings call in a couple of days' time. For anyone who hasn't heard of Abercrombie and Fitch, I'll be like very surprised. It's essentially an apparel's retailer, right? So they make clothing, primarily, I guess, yeah, like hoodies, jeans, basically like normal clothing. And they have two primary brands, which are obviously the Abercrombie and Fitch brand itself, and then also Hollister, which again I'm pretty sure a lot of people have heard about. I guess the way to look at both the brands separately is the Abercrombie and Fitch brand is, I guess, more tailored towards adults who, where the price target is, or the price range they sell their clothes is, I say, like the mid-market range. So they sell their clothes, say like the mid-market range. So I say like they sell a hoodie for like maybe $60, around that price tag, which is not the cheapest, but also not exactly like designer Louis Vuitton, LVMH, kind of prices. So, and they also then try to strive for like decent quality with their clothing as well. So I feel like they have, in my opinion anyway, one of the best like bang for your buck, or like quality equals price ratios in the sector. And then they also then have the Hollister brand, which is much more, I guess, targeted and focused at the teenage demographic. And the quality, I'd say, is probably slightly worse, but then the branding and marketing side of things, I'd say, are a bit higher level. So the actual branding of Hollister is probably deemed or looked at in a slightly more, I guess, premium manner. But yeah, I guess the reason I wanted to look at the stock in the lead up to its earnings call in like a couple of days' time is just how badly the stock's been beaten up. I think if I can get a chart up here, I can show you actually. So yeah, as you can see, in the last like 6 months or so, stock's down 25%. I think in the last year it's about 18%. But yeah, after the incredible bull run it had from 2023, where obviously, via TikTok and like really good social media marketing, the brand really caught on fire in terms of popularity and trends. And then obviously that coincided with them just having brilliant product releases with good quality clothing at, again, good quality prices. So yeah, I guess my analysis is just to see, what the story is really, why the stock's down now 25% in the last like half a year, and whether it's justified, whether, again, I think one of the issues I think you need to realize with a lot of these fashion and clothing companies and stocks in general is that they're very cyclical. So like most consumer cyclical, I'm missing the name, right? Consumer cyclical. But with most consumer cyclical stocks, they come and go in terms of popularity. So I remember a time where Gucci was like absolutely killing it in terms of sales and numbers, and then now they've had like a massive downturn, right, in terms of, again, popularity and perception in the market. And I think it's just natural, because one of the things you need to realize with a lot of designer clothing and brands, once they get popular, it's no longer seen as like a cool thing to wear anymore if everyone else is wearing that clothing, if that makes sense. Whereas when a brand is up and coming, or kind of recovering, for instance, and you're the only person wearing it, I guess, yeah, it makes it you seem much more I guess trendy, or whatever the word is. So that's a thing to really keep in mind with a lot of these designer brands. I think there's a few that kind of are able to skirt past it. Like I think Chanel is one that comes to mind, or Hermes. I think that's how you say it, right, with the Birkin bags and stuff. But for the most part, a lot of designers are fallible to that cyclicality. But yeah, and I guess with the revenues and stuff, you can see here the sales have been incredibly strong. 2023, as you'll see when I do the fair value targets and talk about that, obviously 2023 was an incredible year in terms of growth, but they're still maintaining it this year, I believe, at least. And yeah, it's a company that's growing rapidly across all regions and across both brands. I should also probably add that if you do want this document, as always, it'll be in the description for free. So yeah, just go down there if you want to grab it and have a look at everything yourself. I won't be going into detail with everything in this video. So yeah, quickly looking at the KPI analysis then. So the latest numbers we have are Q3 2024, just because, again, the Q4 comes out in a couple of days' time. So looking at Q3 and then doing the year-over-year analysis, looking at the 2023 Q3 numbers, you can see they've grown literally every metric that I would say is a KPI for the company. So obviously comparable sales, the Abercrombie Fitch brand, Hollister brand, again, in terms of their comparable growth. looking at by region. So how are they growing in their three primary regions? So their three primary regions are North America, essentially Europe, and then Asia. And then we have a breakdown by digital sales and store sales. Surprisingly, store sales are actually outgrowing digital sales, which I found quite interesting. But they're both doing great, obviously. So customer traffic is looking at, of course, footfall and all those kind of things, and they defined it as up compared to obviously in 2023 where they've defined it as stable, and then conversion rates are also positive as well and improving. So yeah, as of right now, they have like fantastic growth, and they're doing really well. Again, I think it's a very likely case that the brand has at least topped, I'd say, in terms of like branding and marketing with TikTok, and I guess perception with consumers. But I guess the way the market is pricing in the brand is as if they're gonna like all of a sudden drop down 10-20% in revenue and earnings. So I think that alone gives quite a good opportunity. But again, as we're digging deeper here with the future performance analysis, you can kind of see that slight weakening in both digital store sales, but the numbers are still absolutely fantastic, right? Double-digit growth percentages for both digital and store sales, and then the comparables again slightly below, but overall they're doing really well. And obviously with these forecasts, a lot of this is like public knowledge, right? So, but I think one thing that gives an edge, if you were to specifically trade the stock as of today, is that I believe that Hollister brand is kind of being undervalued, and the future growth for the Hollister brand, I personally don't think it's actually been acknowledged or priced in. Where, as you can see, even the consensus forecast is 8-10%, which is basically what people are expecting. But having done a Google trend analysis, which I'll come on to now, and looking at just, I guess when you do a bit of digging and looking at primary sources, right, like TikTok and all these things, I think the Hollister brand, a lot of people are underestimating just how popular it has been the last few months and how popular it actually is getting. So that obviously then leads me on to the Google trend analysis here. So as you can see here, all I did was just worldwide searches for the last 5 years. And so for the ANF brand, worldwide searches, decent projection up. Obviously, as you can see here in the 2023 year, that's when they started peaking and having the massive peaks, and which fed into the numbers and done really well. But surprisingly, actually, the last Black Friday holiday season around November 2024, they had their all-time high in terms of Google searches and popularity and trends and stuff like that. And then with the Hollister worldwide searches, you can kind of see the same thing. But with the Hollister worldwide searches, I'd say it's even more like bullish, because the actual average is trending up. Whereas, as you can see here with the ANF brand, I'd say in 2024 it kind of flatlined in terms of the average. Although again the peak was higher than the previous peaks, which again is very bullish. But with the Hollister brand, you can even see the average is just trending upwards, which I think the market is kind of not priced in properly. And I mean, that being said, I feel like the market's kind of the way the market's pricing in the stock, you kind of expect it to be slightly trending down or not hitting new highs. But the fact it's hitting new highs, I think for me personally, just shows there seems to be some sort of disparity between the two. So obviously, as with everything and all trades, there's always risk. I guess one risk that's keeping like the price constrained is the tariff risk, right? As is the case with a lot of retail companies at the moment. And I guess with a tariff risk, right, especially with a company like Abercrombie and Fitch, where their main market, as with most retail companies, is North America and the US, having potential tariffs with Canada, Mexico, China is always going to be a bit of an issue. That being said, I feel like the issue compared to some other companies who have heavy manufacturing bases within China, like your Nikes, for instance, Abercrombie, I feel like their exposure to China isn't as bad. So as you can see here, the latest figures I could find were from 2019, unfortunately, which is now 6 years ago. At that point, it was 22% of total merchandise receipts, and then 15% imported directly into the US. But that's actually been coming down, and in recent earnings calls, Abercrombie and Fitch have essentially stated that they're trying to shift their focus and dependence away from the region. So if I had to guess, I'd say now 6 years later, post-COVID, post-supply chain issues we had in 2022, I'd have to say like maybe 10%, if that, of Abercrombie and Fitch's, sourcing and manufacturing is done in China. and essentially the place they replaced it with is Vietnam, which is very actually convenient given the fact that there's been no talks of any trade wars or tariffs on Vietnam yet. So if Abercrombie are able to kind of shift a lot more imports into the US via their Vietnam facilities, they should be able to avoid most of the tariff issues. That being said, I believe for a lot of their US consumers and stores, they currently, I guess, fill them up with goods manufactured and sourced from Mexico, given again proximity, and especially the last few years with the supply chain issues, a lot of companies are now, it's called nearshoring. So for instance, a lot of European brands, say, that sell in Germany or the UK, they'll source in places like Portugal or places nearby with slightly lower wages, right? And so we're seeing that a lot now, especially in the US, where Mexico especially has recently got a lot of manufacturing and sourcing deals, primarily due to its proximity to the US and then obviously lower wages, which obviously then Trump saw and didn't like, and now the Mexico tariffs are in place. So that is one way I think Abercrombie & Fitch could get hit, is via the Mexico tariffs. That being said, as of today on 3rd of March, they're not come into effect, and I think one of the main reasons is because Trump is using it as a political, I guess, tool for other things like broad border policies and things like that. So it's definitely something to keep an eye on. It's definitely a risk factor that could affect their margins. But again, I feel like they have a nice spread of factories around the world. You know, some in Portugal, Ecuador, Philippines, Mexico, right, Guatemala, Vietnam, Indonesia, India. Like, as you can see, they have a very good mix and spread across the world. So I'm hoping they're able to mitigate a lot of the tariff risk. That being said, the best way I believe to mitigate tariff risk is to have some sourcing and manufacturing in the US. But again, in terms of margins, especially for something like clothing, that could be a serious issue. So I did like an in-depth analysis on the management team as always. Just I like to see, you know, a management team's experience, their educational background, expertise they have. Overall, like a TLDR, I guess, we can skip down here, is the educational background and qualifications are solid. So some top universities, but overall I'd say a mixed bag and not really that great compared to some other companies when I look at them. But that being said, it is a apparel's retail manufacturer, right? So it's not exactly some high-tech growth stock that, you know, you need very high technical knowledge. You know, at the end of the day, it's just basically clothing, right? I'd say the most important factor when looking at a management team for a clothing company is more their experience and their track record, and that for Abercrombie and Fitch is absolutely fantastic. A lot of these people, and this essentially I think everyone in this key management team list that I have were all at the company during the, you know, the 21, 22, 23 peak and boom that they had, you know, kind of really having a great turnaround story with the company, the brand perception and results. So yeah, it's a team that have a great track record, you know, relatively young for a C-suite, and yeah, I think overall decent, I'd say. This then obviously leads me on to the main part of the and the best part, I guess, right, of the analysis, which is giving, you know, fair value price target. And yeah, like I said, they've had absolutely fantastic growth, right? So yeah, 2022, obviously the sales stayed quite stagnant, and then earnings got absolutely hit, but that was because they were expanding and kind of growing their digital infrastructure for 23 and beyond, which has, again, as you can see, paid absolute dividends. So then earnings went back to normal. So I think in 21 it was $4.2, and so then 23 it was 6.2. So yeah, they had a massive rebound in earnings per share, and then the sales growth was really impressive for a company the size and as old, I guess, as Abercrombie and Fitch. To have year-over-year sales growth 15% was absolutely fantastic. Which then obviously brings me on to, in a couple of days' time, you know, FY24, and again, if you look at the numbers, and a lot of these are Street and Wall Street estimates, right? So Abercrombie themselves are essentially projecting 15% increase year over year, which leads to around just under 5 billion in sales for this year, I'm kind of expecting. And then their EPS growth, again, very strong, 69%. Again, this is pretty much Wall Street estimates of around $10.50 per share. And then if you look at the current valuations, that's why I'm a bit confused, because it doesn't make a lot of sense. We looked at the qualitative and the business performance factors, especially like the Google Trends, great management team, and yet the valuations again, kind of don't make sense. So the current EV to sales enterprise value that is 1.2, and based on the forward it's 1.1, which seems, I'd say, quite low, given a company like Abercrombie's stature. And then the current P ratio is around 16, and then the forward P ratio is around 9, which again, it's just I don't know. Especially in this current market, I'd expect to see those kind of P ratios for essentially a company that's completely stopped growing, probably declining slightly. Very just run-of-the-mill average S&P 500 company, right? And even saying that, to be fair, in this current market, some companies I'm seeing have like a 20-25 P ratio, and they're just absolutely nowhere to be seen in terms of performance. So when you factor in the Google Trends, the brand perceptions at an all-time high, for me it just doesn't make sense to be valuing the company with these kind of multiples. And even if you do have decent multiples, say like a 20 P ratio, based on the projected EPS hopefully going to come in a couple of days' time, it leads to a price target of $210, which, I think today, as of today, the stock was trading around $100. So that's a potential 2x. And then again, given a relatively conservative sales multiple of around 1.5, you still get a price target of around $146. So I think for me, there's like a real disparity between, the qualitative and the KPIs, right, and the performance numbers versus the valuation metric, versus the valuations that the company's getting assigned. It just something doesn't add up. And if I had to guess, I think it's because, one, tariffs, and then two, the market's obviously pricing in that the brand has topped. Popularity is going to start waning. Whereas even if the company can just kind of maintain the growth they've managed to accumulate these last couple of years now, especially in FY22 and FY23, if they can kind of maintain it, if FY25 here are projected a 6% earnings growth and a 7% sales growth, again, these are based on analyst estimates, but even if you half this, right, it's still grossly undervalued. I think without me rambling on too much more, I'll leave it there. But that was the Abercrombie and Fitch stock analysis.